Greetings, Algo artisans. Kind of feels like 2021 again. We've got Roaring Kitty coming back, doing the meme stocks, GameStop, AMC, just moving up in the charts. But is it going to last? We're going to jump into it right now. Okay, so here is the chart for GameStop. The pre-market open was pretty high. It was actually right at about this yellow line, the $64. We're looking at another scenario where there was a lot of short interest, where a lot of the large money had gone short, and then retail traders supposedly pushed up through those shorts. So what does that mean? There's a decent chance that right about where I'm going to draw this line is where a lot of the larger money had gone short. I didn't look at the data, but this is just an example of how these things work and why these meme stocks go like they do. And we're going to go into a little bit of the history of what went on. What I'm going to show you right now is the technical example of why these things can rocket up like they do. Because it isn't just simply a bunch of people buying and pushing the price up. Technically, it is actually people selling and then their sells turning into buys. What does that mean? Well, let's just say that you were a large investment firm and you had a short on at 2061 or 2070, let's say, where that yellow line is right there. You felt the price was going to go down, and so you went ahead and put on some positions. It might be shorts, it might have been options. Either way, whatever the scenario, you plan for the price to go down. Whenever a professional trades, there's always a point past which they're going to exit that trade before they lose all their money. They have a certain amount of money that they're willing to lose. It's called a stop loss, and we have explained this many times on these shows. If I never not use a stop loss, except for some spot positions is another story, but for trading, almost always have a stop loss. So let's pretend for a moment that this yellow line here is where they end their position and they felt it would go down. And let's say this yellow line, or let's just make it a blue line, is where they would exit the position. Just in case price goes against them, they decide they're going to get out right there. Lo and behold, a lot of people bought and the price moved up to this theoretical area where they decide they're going to get out, right? If you sell something, you think the price is going to go down, and in effect, you're going to push the price down just a little bit. However, the opposite of a sell order is a buy order. In this particular situation, the person who went short probably would have exited their trade down here into some profit, right? Whatever their target was, they might have said, we're going to sell, we're going to exit the trade and cover our shorts at about $12.50, and they would have had some handsome profit. Well, if the price goes against them, they would exit up here and cut their losses. Again, that's called a stop loss. Now, when a sell order stops out, that tends to be a market buy. It could be a limit buy, it could be either way, it almost doesn't matter, but you have a buy order. That's how you exit a short position, is you buy. And a buy is going to force price up. And when you have a lot of very large traders with many stop losses here that are all effectively buy orders, then those buy orders are going to combine with all the other traders who are just simply buying the stock or going long or doing, buying calls, whatever your scenario is, and the price is going to get forced up for two different reasons, right? You got people who want price to go long because they are long, and you got people who are in shorts who are exiting the position. So this is what can cause the price to move up as such, and it does cause billions to get lost by these larger traders. Now, we did have this phenomenon back in 2021. We had the whole, stimmy checks. We had people home in the pandemic, people not able to work, and so they were turning to the stock market to try to grab some money. They're just looking for some income, and they had a lot of free time, so they were sitting in front of the computers, and at that time, you had a couple of stocks that were not doing so well, and that's back here where you see all this action go up. GameStop at the time was in trouble, and price had been crushed down real low. I mean, approached zero. Take a look here. You can see, I think we had a low of about 64 cents, which is incredibly low for a stock that really not that long ago was worth $16. That's like a times 30 to the downside, right? It's nasty. All of these large players felt that GameStop wasn't going to do well. It might have had to do with just the changing video game world, more people going online, going digital. And as we covered today in our private show with V the Gorilla, that actually was not a good assumption. Console games are still doing really well. However, a lot of people are ordering their console games online without having to go to a GameStop, right? So GameStop's model seemed to be fizzling out, and a lot of large traders were selling it, going short, and making money on the way down. At that point, we had that scenario where during the pandemic, a lot of people started pushing up against those stop losses, and they cascaded into these massive moves up, and people made millions and millions of dollars. A lot of young people made a lot of money. A lot of very large traders got wrecked. A lot of your large groups like Citadel and so on and so forth lost billions and billions of dollars. Okay, now that happened when GameStop went from essentially about $4 up to 120, and that happened within 3 weeks. And most of it happened in that last week, right? You had price sitting at about 20, went up to 120, made it times 6. But for those who played early, they really crushed up. And at the time before this massive move, this was a massive move, right? If you just look here, prior to this very large candle, even if you were, say getting in at say $2 and it made its way up to $5 or $6 or even $7 within a matter of months, that's big. That's a times 3, times 4. But when this really started to take off, especially when you see this move down here in Wednesday, the 17th of February-ish, right, mid-February, price went from $10 and eventually made its way up to about $85. So the short squeezes really started to keep hitting and hitting and hitting. However, there was a lot of talk around whether or not this was being allowed to happen, at least after the first time. I was made to understand just by some kind of talk, inside talk type stuff, not that I got any kind of insider information, no laws being broken, nothing like that. It's just kind of people who were privy to other information were saying that after this major move, a lot of the smart money got in and shorted from the top and made all their money back and more on the way down, and then decided to take advantage of these people and make these moves happen. And some even think that the entire thing was fabricated. Some even think that these companies kind of made this happen, knowing that people were home during the pandemic, front loading, maybe during this whole time when price was really low. There are a lot of different theories out there as to the smart money actually understanding what's going on. So now we're back to today, and Roaring Kitten is back online, the same person who was kind of, we can say, the de facto leader of this movement back in 2021. We had all this talk about the small traders getting the bad companies back and making them lose millions, and it's a revolution, and that's fine. I like the sentiment, whatever works, right? This is one of those things where it's just a lot of hype building and it causes a lot of money to move, and okay, good for volatility. I'm not saying it's a good thing or a bad thing, it just is. And for those who are able to take advantage of it, it certainly is. Well, so quick look at the daily chart here. To review what happened this morning at the open, price closed at about $30-ish yesterday, and the pre-market was around, say, $68, $70. We were doing our morning show for our private group, and I told everybody, I said, look, the smart money sees all this, right? That's if the smart money didn't simply engineer it, because they could have, but they certainly see what's going on. And there's a really good chance that this is not going to go the way that people think it is. And there was so much hype, so many people talking, so many people buying their calls and, going long on this, that it would not surprise me to see price just dump back down at the open, right? Everybody gets wrecked. And now it might go back up. I'm not saying it won't go up, because it very well could. But if you look here, back in October here, early November, you saw price peak out at this area and do nothing but down after that. So every time you see one of these peaks, what you're looking at is the last people to buy in at the top. A ton of people bought up here, otherwise these wicks wouldn't exist. And a lot of people bought at these upper levels. And a key area is at the top of each of these peaks. That's where you're going to get what are called bag holders. Bag holders are people who bought in high and they held on, and they're going to want to recuperate their loss. They're going to wait for price to get back to where they bought so they can just get out at break even. There's a lot of that going on. And because that goes on, you have a lot of other people who are going to sell at that time because they think the bag holders are going to sell, right? So it's kind of a self-fulfilling prophecy. And I did predict this morning there's a good chance the price could simply just reject and head straight down after that. And this is what it did. Now, it is still above yesterday's close, but a lot of people who bought in way up here thinking price is going to go up to Valhalla, well, they're not doing so well right now. They're actually down about 30%, 33%. Again, not to say it won't go back up. This could just be a retracement on the way up, just like we saw back here at the beginning of the entire thing, where price made this nice move up, came back down, and then moved up again. Or even several days in, where it came back down to its pre-earned prices and then it made its way back up. But it never really made its way all the way to that top again. Is the mania over? Is it going to continue? I'm of the opinion you don't really have the stimmy checks coming out anymore. You don't have the same kind of money floating around. Some of the studies say that credit cards are being maxed out. So the freedom to sit at home and trade and the capital to do so, that's in question. I don't know that there's as much buying power with retail as there used to be. Retail might be a little bit smarter, but usually it's not. You're probably going to have some people who know how to do this better. However, the problem is that the smart money is going to be a bit smarter, right? They're going to run this game. They know it better than ever. So I don't know that I would mess around with this. I would use my algos if price did come back down to maybe this yesterday's close at 30.22, or maybe even down down to this consolidation here that was basically topped out at about $17, $18. If I were playing meme stocks, or even if I was going to mess with the options chains and grab a call, it wouldn't be until price got to at least 30 or even 18. And then I would be paying attention to not only the algos, but also market sentiment and so on and so forth. We're going to take a quick look over at AMC. I haven't looked at it yet, but I'm pretty sure we're going to see the same type of thing. Yeah, very much so. AMC rocketed up, and the prior high was sitting, I mean, this is literally the same thing that happened. Prior high from October of 23 was sitting right up here at about 11.35. Price rocketed up, rejected, came back down. So anybody who bought above the current price, and especially up towards the top of this, they really got hurt. Again, I called this morning. I said it would happen before it did. I said it would happen before the market opened. I don't know the future, but this was my thesis. My thesis so far has been correct. If you want to know more about this kind of stuff, if you want to hear mine and V the Gorilla's thoughts, come on over to algofactory.tech. We help people build trading algorithms. We teach them how markets work, and we can help people understand how things like you see on the screen actually happen. We're over at algofactory.tech. Let's take a moment and listen to one of our customers' testimonials. Very happy customer who's having success building his trading plan.
Hey, Cowboy V, I just wanted to give a heartfelt thanks for putting this project together. I initially joined Algo Factory a year ago, concerned about a repeat of the 2008 Great Financial Crisis and the prospect of losing my job again. Within 12 months, under V and Cowboy's expert tuition, including live reviews, I've created a profitable algorithm launched across a selection of assets. Now, facing the prospect of redundancy and a nice fat severance package to trade with, my current worst case scenario is to keep my job. Thanks again, guys. Really appreciate what you've done here.
All right, thanks for listening to that. Don't forget, trade your job, upgrade your life. We'll see you on the next one.